All right, so let's move on to one of the middle stories here, which is Amazon. I'm going to play a little bit, just the first part of this video where some analysts were talking about the numbers beat, and then I actually want to touch on this idea of um, Walmart and Dollar Tree afterwards.
Understood.
Surprised at all that we're seeing Amazon shares move higher despite a very slight miss when it came to cloud?
Well, thanks for having me this morning, Frank. No, I think that you're right. It was a little bit below what people had hoped for, but it's the operating profit that blew away the numbers by 20% upside in the quarter. And they forecasted for operating profit to actually be above in the fourth quarter. So I think the combination of his bullish commentary, particularly on AI, and that very strong, profit margin is giving people a lot of hope.
Giving them a lot of hope, Jordan, but also 81% increase when it came to CapEx spending for AI. We've seen some other companies kind of get dinged for that. In your mind, was it the margin expansion? Was that what gave investors a lot of confidence that that spend is going the right way?
100%. I think if any of these companies were to show margin degradation or compression and continue to spend at these high rates, the stocks would definitely go down. Their multiples would contract. But the combination of very solid, healthy revenue growth at massive scale and the fact that they're seeing margin expansion, coupled with the comments by managements that they think this is a once in a kind of a lifetime opportunity to monetize AI in the future, I think is the reason why you're going to see more people buy versus sell on these prints.
All right, so Jordan, coming over, excuse me.
All right, so that's what I found to be interesting, that the CapEx spending that is happening for some of these companies to integrate AI into the systems aren't, and this is true across the board, aren't really eating into the margins. I would have expected the other way around. I would have thought that the hype they'd be running towards integrating AI, and then we'd be seeing margin compression. But then they would say, "Hey, but we are investing in the future. We think AI is going to be the thing where we're going to generate more revenue and blah 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 blah." But we're not seeing that. We're seeing not only are they integrating it, not only are they spending it, but they're not really negatively affecting at least the expectation of earnings and revenue. So that's pretty interesting. However, setting the AI thing aside, two other news beats that were sort of like following the trails of this whole Amazon thing was that Walmart has cut the price of their Walmart Plus membership by 50% in order to try to compete with Amazon Prime. So they're trying to get more customers in, and they are realizing they have to sort of compete on deals, on sales. Right? They're not just competing on the visibility. More and more consumers are demanding discounts on the things that they're buying in order for them to be able to meet these numbers. And then, so Walmart is chasing Amazon, and then I believe it was Dollar Tree. They're also doing something similar to chase Walmart. So it's almost like this race to the bottom of who can get the biggest discount in sales, because, and this is the assumption, that inflation is eating so much of the disposable income that consumers' propensity still is to buy, but they want to buy something that's on a discount. And that might be, on the heels of our first story, might be another indication that even though on the surface things look okay, spending for consumers are still up, that they're looking for such deals that might be a leading indicator or coincident indicator of a weakness in the funds available for the American consumer. I'm wondering. I'm in Canada. I'm all the way up here in the igloos. Are you hearing the discussion of people around that? Hey, things are really tight compared to what it was before, and people are spending more in line of keeping up with the Joneses, keeping up with the habits that they had before. Is that at all floating around?
Not really. I mean, you're making a fair point about how inflation has raised the cost of goods across the board, and that cost in general hasn't deflated enough to make things affordable again. So the demand for discounts makes a ton of sense. However, the data that we're given, at least on core PCE and the PCE price index, is still showing that consumer demand is about where we would expect it to be right now. I would be more interested in seeing how fourth quarter ends, especially around retail sales, as an indication of the spending habits of Americans at the moment. But No, I'm not really hearing that. Anecdotally, within my friend group and within my family members, it doesn't sound like people are that concerned about the price of things. We're still going to the store. We're still buying the same things. I'll let you know if that changes, though, because that is an early warning signal.
Yeah, that's what I find interesting, because I have the same perspective here. In Canada, our inflation is pretty significant. I mean, any inflation in countries other than the United States is always a little bit worse because we can't print the money in the same way. And even though people around the edges talk about it, it's sort of like, if there was a hotter season or more of a rainy season, it's not actually changing their behaviors. My circle of friends and extended family and what have you, they're still going on vacations. They're still spending what they had before. They still have all the same subscriptions. And even though they're grumbling around the edges of it, maybe they'll order sushi one less time per month than they would normally order. I'm not sitting around with a bunch of millionaires and bigwigs here. These are just,
right.
If anyone was going to be hurt
Average
by
people.
the average inflation, yeah, that's what would happen. And so this is something that's like reconfirming to me the thing that we had talked about a few weeks ago, which is it's the volatility of inflation that matters. As long as people have an expectation of what they'll be able to spend and what they have to budget for, what have you, as long as the expectation's there, even if the expectation is that things will increase over time, let's say, they can adjust. And it was the volatility of the inflation that we had in 2022 that was like, people didn't see it coming. And now people go to the grocery store and they go, okay, well, bacon is 3 times higher than it was before. So that's just the cost for buying bacon. That's just what I'll deal with. And so I'm not seeing this as a systemic problem in the way that doomsdayers might talk about it in YouTube comments.
Yeah, I think that's probably one accurate takeaway from all of this is that we shouldn't underestimate the strength of consumers in the United States. We thought that some of that discretionary spending would dissipate during COVID and through 2021 and 22, and instead it remained strong. And it was surprising to the extent that we saw a boom in the markets. So I really think that there's a lot to take away from how surprising consumer spending habits can be, even right now with the average interest rates of credit cards being at nearly all-time highs. Another anecdotal story here is I have friends who are taking vacations across over in Europe right now and are definitely putting that on credit cards. And that's pretty high interest traveling, but it's not stopping anybody from continuing to spend at rates that we're pretty used to. So I think you're probably right. The volatility and inflation, I think, does have an impact on consumer demand. And like I said, the best data we can go on in aggregate is the consumer spending reports that we get month after month. So we'll see how things start to unfold here for November and December.
Yeah, so I think we're still in buy the dip territory because nothing is telling me that this is really going to slow down anytime soon. And so when I see dips in markets, NVIDIA had a pullback, Bitcoin has a pullback. I go, okay, well, might as well buy in because I don't see the sky falling.
It feels like some of these pullbacks are just the market looking for any reason to call this the top, because no one can believe that we're going to see some massive returns on CapEx going into AI right now. But I think the promise coming from the Mag 7 is they're extremely confident in the returns that they expect from AI. This could be a once-in-a-lifetime opportunity, probably more than likely is a once-in-a-lifetime opportunity, with valuations of Perplexity being in the billions of dollars already in less than a year of its existence. We've got products cropping up everywhere in this space. You know how bullish I am on AI in general. And so I really think that we're going to learn a lot over the next couple of years about where that spending goes and how efficient the use of that capital becomes.
So fascinating. I love it. And I think a friend of mine shared recently that Ubisoft released a video game, the first video game with an NFT in it. And the NFT costs $64,000, if I'm not mistaken. So I go, we're back, baby. We're back in it. The dip is over. We're rising again.
It's always a good sign. But yeah, I do think that there's a lot to be said about the reactions that we seem to need at this point, or the reactions that we're seeing right now to even the smallest reports. Now we're getting so like this is a really good sign to me that some of these market reactions are probably overblown, because we're getting really into the weeds on balance sheets now, which is a little different than typical pullbacks, right? Where we have broad sweeping estimations as to what's happening in the market. When people are looking at the tiniest little balance sheet changes in CapEx and calling that the reason this is the top, that's how you know it's probably a little overblown.
And it means they don't have their allocation. They're not allocated to it.